That was Mr. President yesterday at the Wole Soyinka Center for Creative Art saying that Nigeria will succeed and, of course, urging Nigerians to stop saying negative things about our dear country. This morning on the program, we're still looking at that celebration of Nigeria at 65. You will recall that yesterday we looked at so many sectors, Nigeria 65 in general, and of course insecurity. But our conversation this morning is going to be on the manufacturing sector and the overall growth of the economy vis-a-vis the figures and statistics quoted yesterday by Mr. President yesterday in his broadcast, wherein he said that some of his economic reforms are beginning to yield results. You would also recall that some time ago, about a few weeks ago now, the WTO DG, Dr. Mrs. Nkojo Iweala, also endorsed the economic reforms of Mr. President. And some of the policies introduced by this administration has been very, very impactful in terms of increase in oil production, increase in foreign reserve, increase in revenue from non-oil sector, and of course, reduced interest rate rather, just to name a few out of the so many introduced by this administration. But then, how far can we go? Are we really moving at the pace we ought to move? How do we accelerate the economic growth of the country? Some of the issues we'll be looking at on the program this morning. We have right here with us in the studio, Oluseyi Odufua, Managing Director and CEO, Capital Plus Management Limited, is equally a financial management expert. It's our pleasure to have you.
Thank you for having me.
How did you celebrate your Independence Day yesterday, Nigeria at 65?
Well, we reflected on the good trajectory of the economy. Yesterday we held, Thanksgiving service, and also we mentored quite a few people and made people believe more in the economy, that Nigeria will get there, within a very short period. In my last visit here, I said it very clearly that from 2026, we'll begin to feel the dividends of this renewed hope agenda of Mr. President. And late 2025 is quite obvious that we are getting there, because the reforms, like Mr. President said, is beginning to yield very positive results.
Okay, so without yesterday, we cannot talk about today or tomorrow. Looking at the Nigerian economy in 65 years, initially it was good, and after some time it collapsed, and now we are trying to rebuild again. Looking at it generally now, what were those mistakes that we made in those years that we think we should avoid now?
Okay, so we started before 1960, but 1960 we got independence. Everything looked good. In fact, the Naira was at par with the pound sterling, as at that time. The Naira was even above the US dollar as at that time. And so in the 80s, manufacturing, power, and returns to Nigeria, dividends to Nigerians was quite good, free education and things like that. But in the 80s, when we had the structural adjustment program, and IMF and World Bank instituted programs, these were the programs that derailed our trajectory and growth. Because there's no way, and I keep on saying that the more you borrow from these institutions, the more they subject you to their whims and caprices. And there's little or nothing you can do except you get yourself out of their stronghold. As we speak, so many of those loans are in their double digits, except for the Chinese loans that, take so much from you. And so successive governments have gotten it a little bit wrong in terms of policies. Sometimes you have policy somersaults. Sometimes you even feel that, are we ripe enough to run democracy? If you have your trajectory as a government for 8 years, once that 8 years is gone, the successive government comes up with its own agenda. So there's no 30 years plan. There's no blueprint for an economy to run for 40 years. We don't have it. And so for every 8 years, successive governments come and they change the agenda. And that's why you know, Mr. President, looking at Lagos State, when he was governor of Lagos State, 2007, he drew a 30 years plan.
Master plan, yeah.
Good. 30 years master plan for the entire state. And that 30 years master plan, there's rail inclusion.
BRT corridor.
We have BRT corridor. He did something about free trade zone. And you know, on the general growth, even he brought in Enron for power. If not that, it was derailed by the Obasanjo administration. It was Mr. President, while he was governor, that instituted borrowings. He was the first person that raised a successful bond in this country. And that's the master plan every successive government, in terms of governors, that are running to today. It started from Lagos State. So, as a country, Nigeria, we don't have a blueprint like that. Except if we will say that, okay, if President Tinubu finishes his 8 years, I'm not saying he will do 8 years, but I'm only saying that let's project for that length. If he finishes 8 years, he will be the one to put another successive government, which, you know, is democracy, is a government by the people. And so there must be a master plan so that successive governments will begin to look at the trajectory of the previous one and have Nigerians in their mind as the major interest. If not, it will be, you know, by section, by tribe, by ethnicity, and that's the way we have been running as a country. So we got it wrong by not having a master plan. We got it wrong by depending too much on foreign bodies for survival. And that's why, you know, things are beginning to change now. In 2023, before 2023...
Okay, before you go to 2023,
all right.
According to the history that I read, the Nigerian economy was dependent majorly on agriculture before we discovered oil. But now it appears we have pushed agriculture aside. Ordinarily, agriculture should complement the blessing of God, which is oil, but that is not the case, as we see.
Well, if you look at oil too, it's a natural endowment, which is also given by God. And we must exploit it. And it's a benefit to us. But it is because of our human capacity management style that used to affect us. Before now, cocoa, all the crash crops, rubber, plantations, you know, granite, pyramids, you know, in different, you know, regions of the country. That was our mainstay. And they contribute about 90 to 95% of GDP. When oil came, it became our mainstay because it was just readily available, and we knew that we had a projection of about 100 years of production. Now, if you ask, they will tell you maybe about 60 more years to go. But it does not mean that new oil wells will not be discovered. And so, you know, it became our mainstay. Our thinking faculty became a little bit lazy too, because it solved all our problems. And up to now, as we speak, that's still where we are. And so when Mr. President came, he made it very clear that we need to gradually begin to diversify from dependence on oil production. And that's what we are seeing now. You spoke about the manufacturing sector. Manufacturing sector, as we speak now, is just contributing about 10% to GDP. As at 2023, it contributed just 9% to GDP. In 2024, I think about 9.27%. First quarter 2025, I think about 10.28% to GDP. Whereas ordinarily, our manufacturing sector should contribute nothing less than about 40% to GDP. But Mr. President has made it clear that gradually, you know, we will begin to disengage from the oil sector as our mainstay. And I think we are on the right trajectory.
Okay, so looking at this broadcast of yesterday, there are so many statistics and figures quoted by Mr. President. And at the end of that broadcast, he did say that the worst period is over for the economy. Would you break it down for an average Nigerian to understand why Mr. President was so confident to have said that yesterday?
That's a beautiful one. And that's why I wanted to go back to
2023.
Before 2023, because you can't get to somewhere without coming from somewhere. So before 2023, what did we have? Beautiful statistics, like, you know, we were spending 97% of revenue to service debt. 97. It means that in a few months, the economy will collapse. Our naira will become like Somali currency.
Or Zimbabwe.
Yes, you will hold 100,000. you will not be able to buy bread. That's what it meant, because it was collapsing already. And you know, there was a masterstroke. President Buhari, may he so rest in perfect peace. You know, as at that time, subsidy was in the budget up to June. After June, it was not there. So what Mr. President did was just to take the bull by the horn and announce what was on paper. That
removal of subsidy.
Removal of subsidy. It was a masterstroke. You know, look at what is happening between Pengassim and Dangote as we speak. So I'm not saying anything, but you will know who the cabals are. You will know. And that's what we are talking about. And so he said, no more subsidy. People will bring in empty vessels. Sometimes no vessels, but documents to say that they brought in crude, millions of dollars, and they will get subsidy for it. A few people, less than 0.5%
of the population
of the country, they were taking as that much. And so many borrowings too that was not accounted for. Look at the humanitarian ministry before President Tinubu came. During COVID, they borrowed about $3 billion. $3 billion. And that $3 billion, it was on paper that they shared it to vulnerable families across the country. I'm sure I did not get, because I'm one of the vulnerable families.
Likewise.
No, you are a broadcaster. No, you are not. I'm sure I didn't get. I'm sure so many people around me didn't get a kobo. But President Tinubu came and paid
even
back.
The school feeding program then.
Nothing to show for it. In fact, it was more centered to a particular region, which we all know. There's no need to mention names. But the truth is that it didn't go around at all. So much was siphoned. As at that time, our borrowings was already about 100 trillion. From about 24 trillion from Jonathan. So in 8 years, we borrowed over 70 trillion. As at that time, the government of President Buhari printed about 30 trillion. 30 trillion. They printed money, and those monies, where are they today? We can't say that they used it for infrastructural development. It was used for recurrent expenditure. And so much of those funds are in different countries abroad today in personal names. And that's the truth. And today we are complaining that Naira dropped from 400 Naira to 1,500. It's simple economics. It must fall. And that's why when the president...
Because the 400 was not the real value of a Naira.
It couldn't be. It couldn't be. And that's why IMF and World Bank made it clear that if you want to have a foreign partnership with everywhere in the world, then your Naira must reflect its true value. It must. We can't continue to patch the Naira. We were spending close to about 10 billion every day to manage the Naira. As at that time, that's CBN. Foreign reserve fell to about almost about 2.9 or 2.8 billion dollars only. And in 2 years, this man has returned it to about 40 billion as we speak. As we speak, Naira has stabilized at 1,500. It means you can plan. You can plan for export, you can plan for imports, you can plan for your business as we speak. Though it got to about 1,800, 1,900. But it has stabilized at about 1.5. And what did he do? Another master stroke on the same day was to float the Naira, you know, so that Naira will find its true value. Then we can begin from there. Look at the trajectory too. Inflation at about 38% fell to 32%. After rebasing, as we speak, 20%. 20% for inflation. It means that the economy is stabilizing. NPR at 27.5%. Asymmetric corridor of plus 500 minus 100. As we speak now, it's stabilized for about three meetings. That's for 6 months. And as we speak, NPR has reduced to about 27%, which they removed about 50 basis points.
So you do agree?
Plus 250 minus 250.
So you do agree with Mr. President that indeed the economy of the country is on the right path?
It is. In every way you want to look at it. Look at agriculture too. You know, agriculture, now we can say very clearly that what is food inflation as we speak. Food inflation about 23 to 24%, if I'm correct. And before it was about 40% of total of aggregate inflation, which was the main driver for inflation at that time. And so if you look at it, the economy is on the right trajectory. Capital inflow has increased significantly by about 32 to 33% as we speak to. So we are on the right trajectory. What Nigerians can just basically say is that it has not trickled down very majorly.
Yeah,
to
because
the
I was going to
masses.
ask you, all of these figures that you quoted, just like Mr. President,
yes.
how does the average Nigerian
Yes.
connect with these figures to
Okay.
actually give them the confidence that indeed
Okay.
Mr. President is doing a good job
Yes.
and the economy of the country is on
Okay.
track?
Okay, so when you look at economics, there are basically stages in economics, and the masses, I just say it the way it is, the masses are on the lowest ebb of when you look at things. Because first, the economy must go in the right trajectory. I'm talking of your monetary policies and your fiscal policies. So once you align it rightly, both will not run, they will run at parallel lines, but they will run on the same trajectory. And so monetary policy-wise, we have stabilized. And that's the truth. And that's why the government of Cardoso has done a very good job. The stability is healthy. Foreign investors are happy, even though we believe strongly that MPR should still come down more so that the manufacturing sector can benefit more. Because as we speak, if you look at our cash reserve ratio, our liquidity ratio is still a little bit high. So for manufacturing sector, they may not be able to borrow much because whatever you borrow now, coupled with other operational costs, you will still not be making anything. And that's why we have problem in that sector. But going by the masses, you know, once the economy is in the right trajectory, the next set of people to benefit are investors. That's the simple truth.
They will have the confidence to invest in the economy.
The investors will benefit on the next line. And so look at a foreign investor. Let's take the US and the UK economies. The highest you can get there as we speak now is about 6%. And so when you look at the Nigerian economy where an average bond is selling for about 19, 20%, treasury bills is selling for 17, 18, 19, 20%, depending on the tenure. It's a good market to bring in foreign investment. And that's why you see over subscriptions to the tune of 400%, 500%. The country wants to raise maybe $1 billion for this week. They will raise about 3 billion. Because, so for us as economists, we believe that though it's hot money, but the economy is good enough on paper for them to make such for them to make such profit. Look at the capital market. From about 52 trillion market cap, it's over 100 as we speak. From year to date, as we speak, the market has returned about 47%. So it means
Return on investment.
Yes, 47%. Where in the world will you get it? So it means that you put 100 million in the capital market, you get 47 million. Where will you get it? And that's why I tell people, I did a business discussion 2 weeks ago, and I was telling the masses, which I also propagate here, that Nigeria has gotten to that level where you don't just consume. For instance, you are drinking beer every day, but you don't have Nigerian brewery shares. You are the lowest ebb. You are using toothpaste, using Unilever product, but you don't have their shares. You bank with GTB. You know, every of your savings is with GTB. You do everything with GTB.
But you don't have their
shares. You don't have GTB shares. Last year, GTB was selling for 45 naira. This year, it got to over 90. That's 100%. Straight up.
Stop advertising for GTB.
No, my apologies. But, you know, we just need to speak sense to the populace so that you will know that Nigeria there's a curve. And that curve, you need to follow that curve. So, as citizens or as the masses, let me use that word, they are the lowest ebb.
Okay.
So they are the last people to feel that change.
Impact of these reforms.
And it will get there.
All right.
It will get there.
Let's quickly go to the manufacturing sector. When you still look at the interest rate, it's still double digits.
Yes.
And the manufacturers still have the problem of power,
yes.
Which is taking most of their investment away. In terms of manufacturing,
yes.
what are those things that we need to actually reform that sector in such a way that manufacturers will also start feeling the impact of these reforms?
Okay, so like I said, yes, the manufacturing sector has been down for a long time. I said that their contribution to GDP is single digit, which is very, very poor. We have some countries in the world, look at China, Singapore, Malaysia, and those ones. Manufacturing covers over half of their GDP. especially China, because Thailand and all those ones. And so for Nigeria, it's still very low. We have the problem of power. We had the problem of forex volatility. We had the problem of government policy somersault, and so many of those problems, which at the end of the day led to high cost of production. All of them put together. And that was why before 2023, or even after 2023, so many companies left. You know, so many big ones left. Some left even in 2024 because they couldn't cope. But I want to say that all of them that left, not all left because of peculiar problems. Because even in 2023, where most of the multinationals were at a loss because of that forex volatility, in 2024, all of them returned back to profit. All of them returned to profit. So some of those companies, see, their ingenuity to change, to adapt to change, was a problem for them. Some of those products they make, you know, had a lot of competition in the market and they couldn't cope. That's why some of them left, not because the economy was that bad. Look at MTN, lost position, Airtel lost position, Nigerian Breweries, Guinness, and the likes. Even my company that I run through lost position. But in 2024, everybody went back to the positives because of various adjustments and the appetite for their products. And so product ingenuity was also part of it. And so in 2025, like I said, first quarter, I think about 10.27% according to MBS in terms of growth. It means that there's a marginal growth in terms of confidence in the manufacturing sector. And those things that, you know, helped it majorly, exchange stability is there at 1,500 fixed in the last 6 to 8 months or even more. We have increase in oil production, which is also there, because increase in oil production, I think a few times that I've been here, oil production was around 1.4 million barrels. And I projected that we'll get to about 1.8, 1.9. As we speak, we have stabilized at about 1.7, thereabout on average, which means that on a monthly basis or on a daily basis, if you look at the price of crude and the extra we make, is billions of dollars in terms of FX to do more business. So it has really helped. Monetary policy stability has also helped, you know, for that marginal increase. And reduction in inflationary pressures too has also helped. But largely, are we going to say that our manufacturing sector has grown? I will just say that is a no. And that's the truth. Though the growth is coming up little by little, but there are still so many things that I feel we need to look at.
Power is key to manufacturing.
Yes, I'll get to power too, that we need to look at. So the challenges that I feel that we have now is low capacity utilization. That's one. So it means that only about 20%, according to statistics, of all the manufacturing companies is stable. So there's a problem. And we need to realize only about 20% of manufacturing. Dangote is part of manufacturing. We can say it's stable, even though as we speak, it's having a very hard time because of the Nigerian politics. You know, it's having a very hard time, but it's a big manufacturer. In fact, it's the biggest manufacturer in terms of cement, in terms of sugar, in terms of flour, and in terms of fertilizer, oil production, and other petrochemicals that it produces. So, but low capacity utilization. 20% only is stable in what we have. Infrastructure and energy deficit is also there. And that's where you come to in terms of power. Power is very key. The service sector contributes about 54 to 58% to GDP as we speak. So the service sector is very key. And without power, that service sector can do nothing. And power is one of the major things everybody's crying about. It takes your operational cost, about 60% of your operational cost, go and check it, or even more, is power, diesel, solar, whatever infrastructure that you use. Your operational cost is about 60% as we speak. So power is very key, and government must try to look at it. As we speak, our generation increased by about 1,000 megawatts, averagely from 4 to about 5. But what do we need as a country? It shouldn't be less than about 15,000 for a population of over 200, over 54 million businesses. It shouldn't be less than 15,000. That 15,000 is on the average of having about 16 hours of power supply in a day, not even 24 hours. So it's a major problem. Forex volatility too, stability was a problem because before now we had multiple exchanges. The black market was there,
the
open market, official market was there. You could get dollars even from CBN at when you fill Form A. Form M. When you do your Form M, you could get as low as 165 naira then, when in the market it was being sold for about 400. Different disparities. So it was a problem. So if you know people who know people who know people, you could get your product, or you could have your production low. If you don't know people who know people who know people, your production may be high. So it was a problem as at that time too. I also feel that the need for value addition is key. And what do I mean by value addition? For Nigeria now, we tend to export more of our raw materials. So there's no value added. Look at cocoa, for instance. Cocoa from the markets, Idore, from those places where we have prevalent of cocoa, they export as raw without no value chain added to it. When chocolate comes back into the economy, it's times 20 in terms of cost. So our manufacturers should have that value chain in the country. In the country. And that's why Mr. President launched
the Nigeria First policy.
God bless you. That's why he launched it, that our value chain must be enhanced so that everything must come from here. It is only the expertise or the need that we cannot at any point in time produce that we will begin to import. And the fifth one I'll look at is policy gaps. As we speak, we have so many government agencies that should be collaborating together to look at our manufacturing sector. Ministry of Trade and Investment, Ministry of Finance, Ministry of Power, Commerce and Industry. We have so many forms of policy somersault, and it's affecting where policies are not harmonized together for a direction. And we'll still go back to 20, 30 years plan.
Is that where the merit or the advantage of this new tax law will come in?
Is there. Where we have harmonized it. And you see, in January, you will begin to see the inflows because it's a master stroke. If you look at contribution to GDP, it's not tax contribution to GDP. If you look at the people in the tax net, we are not more than 13%. Before it was about 10%. Immediately after the tax laws was enacted into law, it became 13. But by the end of next year, it can't be less than about 35 to 40. You will see. It can't be less than that because of technology, because of sound thinking, and the way...
and the harmonization of the laws, like you rightly pointed out.
That's the point. 4 laws together to make a single tax bill.
Okay, let's talk about the recapitalization of our bank as well.
Okay.
In what way
Yes.
are they going to consolidate some of these reforms as well?
Okay, so that's one of the reflection of a growing economy, or an economy that is getting back to its right place where we should be. The first-tier banks, that's the FUGAS banks, the first-tier banks, in 2-3 months, they raised about 1.7, 1.8 trillion from the capital market. It means that our market is healthy. That's why I said from 53 million, it got to over 100 trillion. Sorry, it got to over 100 trillion. And as we speak, we have only a few to go that has not met recapitalization. What does it do to the economy? It makes the economy more healthy. It makes transparency more approachable. It also tells you that through the banking sector, it's a reflection, it's a barometer to the economy, where people will see the strength and the wealth of what we are doing and engage more. And by so doing, it translates too back to the economy. And by way of spending, it increases GDP. When we spend more, it increases GDP, and it's good for the economy. So the banking reforms, banking recapitalization is healthy. We just have a few banks to go. Sterling just closed, and I'm sure the result will soon come out, and I can tell you that it will be oversubscribed because at 7 naira for a bank, where all its compatriots are selling at about 15 naira to 20 naira, it will be oversubscribed. So, and that is not the definition of where we should be still. When GTB, got to over 90 naira. That is not where GTB should still be. So the capital market as an arm of a growing economy has a lot of potential to still go. So we still encourage people to, believe in the economy, invest more. And the major word is we should stop being a consumer alone.
We should start producing.
Stop looking at the price of gari and yam alone. Begin to invest, no matter how small. It is about percentage. Some people tell you, I only have 100,000. How can I be competing with somebody who is investing 100 million? No, it's about percentage. It is the percentage of what you put in as investment that you're going to get back.
As return on your investment.
Exactly. So let's stop being a consumer citizen. We should be an investor citizen. Whatever you enjoy consuming, put your money there too as investment, because there's a disparity there. As a consumer, you only enjoy a feel, but as an investor, you enjoy all. There's a difference there.
All right. In 1 minute before we wrap up the conversation this morning, I wanted to convince Nigerians on the need for them to be more patient with this government. Of course, from what Mr. President, the breakdown of what Mr. President gave yesterday, I know that there's light at the end of the tunnel. So
thank God you believe in the government now.
So quickly, just tell those who do not know or those who are doubting the ability of this government.
Okay, so without playing politics, because we are not politicians, we are technocrats, and we just speak the truth according to the way we see it. And so we've spoken so much about the growth on paper, and we believe strongly that institutions across the globe too, they believe in this government. Even when Donald Trump was issuing very drastic tariffs, he knew that Nigeria as an economy is a partner to the US in terms of oil production. And, he put our tariff at about 15%. And, removing so many other non-oil production sector. So, if you look at it well, the economy is going on the right way. Agriculture is key. We are going on the right way. Manufacturing is just getting its groove. Look at the construction sector too. As we speak, on contribution to GDP, it has risen to number 3 as we speak. That's the construction industry. And if the economy is not moving well, it won't work that way. It won't work that way. And so for Nigerians, I know that we are all seeing it. Look at the reforms in terms of tax. Look at the reforms in terms of local government autonomy. Look at contribution to states as we speak. Contributions to states. A state that used to earn, for instance, let's say 4 billion on a monthly basis after all deductions from FAC. Such states, some of them are getting up to 10, even 12.
Of what they used to get.
Of what they used to get. So my position to Nigerians, as we speak, federal government does not take all revenue. Yes. From FAC, that's the RAMFAC. From RAMFAC, they share to 3 tiers of government. What is your state government doing with allocations from the center? What is your local government doing from allocations from the center? An average LCDA, I'm not saying a local government now.
LCDA.
An average LCDA, you understand, takes a minimum of about 350 million in a month. Some LCDAs don't have
even more.
I know, an average. Some LCDAs don't even have more than 30 streets. Only. What is their contribution to the gutter in your area? What's their contribution to power, even if it is solar? What's their contribution to your security? What's their contribution to mending potholes? Not to talk of your state government. Some of them, as we speak, earn about 15 billion in a month, as we speak. So when you look at the federal government and see what they are doing, what of your state government? How well do you challenge them?
That's the big
question.
Not
center. Your local government, how well do you even know your local government chairman or your councillor that is closest to you?
All right.
So I think we should take the conversation away from the center and shift it to states, where you should beam your searchlight and get results from there.
All right, that's the takeaway from our conversation this morning with Oluseyi Odufua, Managing Director and CEO, Capital Plus Management Limited, is equally a financial management expert, speaking to us on Nigeria's manufacturing sector and economic development. And of course, he also endorsed the economic reforms of Mr. President, telling Nigerians to at least be patient with his administration. Light, of course, it's appearing at the end of that dark tunnel that we used to have. So in a matter of time, the economy of Nigeria will be on the right path. We thank you very much for your time.
Thank you for having me.
All right, we'll take a quick break now. When we come back, it will be the time for Joy to take you through our conversation. Do stay with us.